So how to trade altcoins in the cryptocurrency market. I'm going to explain to you very simply how you can stay above everything and profit on a very speculative, volatile market. So if you do like this content, make sure you do leave a like. Let's crack on. Let's get into it, because I think this is going to be an absolute foundation of what I teach: psychological stuff, mindset, the ability to read trends, the ability to follow momentum, and just hopefully change the way you think. Because as much as it's just a small YouTube video, there's some nuggets in here that you may want to keep and cherish. And the first thing is, ignore the moon boys. First thing, Twitter is littered with rubbish. Poor quality TA, capitals, exclamation marks. It looks horrendous, right? People are getting sick. I'm seeing more and more people come to me. I'm seeing more and more people praise me. I'm seeing more and more people wanting to actually learn because they've been hurt, right? This is why I do what I do. I teach. It's an easy way of doing it. And I need to do a blanket kind of video to kind of catch as many people as I can to show you certain things that may well actually help you versus what you're actually already seeing on Twitter. Now, let's flip the bias upside down a little bit. Too many people, and the first rule is of anything in a market, people often get incredibly bullish. Oh dear. Let me use cap lock because it makes it more fun. Everyone gets bullish at these high points, and then everyone gets very bearish at these low points. Now, a lot of people may be wondering, well, why am I bearish at the moment? Because I believe in my analysis, and I want to talk about other rules in a second, that we are going to retest that 30k level, the summit of 2021. Now, you need to flip this on the other way around. You need to turn it around. Why? Now, as much as we could go lower, you need to start being a bit more bullish lower down the spectrum, because that's where the opportunities are, where the new people will not be seeing them and the experienced heads will be buying. Now, this is where it gets a little bit ropey. Now, as much as it is kind of this situation where realistically when you start seeing rejection, should start becoming bearish when the trend is then changing, where the opportunity is to take profit, you should then be looking at certain ways going, well, actually, why should I be bullish? We've already done like 100x, whatever, you know, stupid things. Now, people just believe it's going to carry on going up. It doesn't. We know that. That's a problem. Now, when we talk about it, and I did a video on the dips not too long ago, I always wait for the uptrend. The only caveat to all this is if you've got profit much higher, you can buy little bits here and there as a good dollar cost average, just in case it is the bottom, because you can't really predict the bottom. That's another thing we need to talk about. Too many people are trying to pick bottoms. It's an impossible task, right? You're better off finding key levels and putting a little bit in, like even 10, 15%, whatever it may be, waiting for the trend to actually become bullish, and I'll talk about those in a minute. And then you've got that as a foundation level, then you can start incrementing your capital within the trend when your probability is high. So you need on your side probability, you need the trend and support levels, you need momentum to follow you. That is the first and foremost that you need to talk about trading in this market. You need to go the right freaking way, and most people don't. Too many people are just buying things like, I'm going to buy this dip, I'm going to buy this dip, I'm going to buy this dip, I'm going to buy this dip. You know, realistically, the dip will only keep falling if it's in a downtrend, and what we are in currently, still a downtrend, right? So mindset number one is start thinking bearish when it's gone on a ridiculous move. Start thinking more bullish when opportunities of demand are starting to be met. Therefore, opportunity for buyers will come into the market. Now, let's look at other things as well. Keep it super simple on this video. It's a bit scattered, but I believe personally support levels are not going to get flipped here, and it is going to remain resistance, or we may well see us go down to this support level. That is a structure, and that is again a game of probability. Too many people come into the comment box going, well, you're just speculating. Well, yeah, obviously it's all about risk, it's all about management, it's all about managing that risk, and that probability factor is hugely important. So what have we got here? Fibonacci setup. Now, I'm not going to go too deep in any Fibonacci stuff or stuff like that, but ultimately if I just remove the Fibonacci, we've just got support and resistance. That is it. This is a previous level of resistance and therefore also support. We're currently below that. This level here is, I believe, the final resting place for the next leg, essentially. Too many people are getting very bullish already, and we haven't formed the structure yet, right? That is my overall problem. So yes, you can be bullish down here, but don't be going, this is the next leg, when the bottom is not confirmed yet. That is another pitfall that people get. They get caught in the emotions thinking it is the bottom, which is why you don't go all in, which is why you only put a little bit of sprinklings in just in case it is the bottom. It's all about probability. The risk to reward of buying this thinking it's going to go forever it's probably, yeah, you may not get right. You may not, you know, you got to look at the right thing. So for me to turn bullish and to explain this as well, there's different caveats to this as well. There's all kinds to look at. There's all kinds of different indicators. There's different ways of looking at charts. There's different time frames, different ways of skinning a cat. And to trade, the first thing you need to do in the fundamental rule of all this, and even though I've mentioned be bearish at the top and be bullish at the bottom, it's simple. You need to buy low, right? And it sounds really easy. And this is the first thing you need to do as a rule. And before you start thinking out and adding to the context of this, and then you need to sell high. So when you start feeling it's getting a bit too high, you should be looking at selling. And the buy low, selling high is the most important thing. Now, I know I'm going to get a lot of questions, and feel free to ask any questions. I will try and get back to you. Apologies for the scammers. You have a problem. The problem is simple. People always complain about one thing. It starts with T and ends with X. It's got an A in the middle. Tax, right? Don't worry about it. What would you rather have? 0% or 80%? Even if 20% is tax, or whatever country you're in, right? At the end of the day, diamond hands do not exist. You will make no money if you worry about tax. If you're better off just buying with, you're just selling it. Take the profit. If you make losses, offset it. It's fine. So don't worry about buying low. Don't worry about selling high. Don't worry about that middleman, that profit game, because you're going to eat yourself up. Too many people go for the home runs. They go for, I'm just going to buy low, I'm never going to sell. Why? Do you not want to enjoy your life? Do you not want to buy something nice? Do you not want to treat your partner with something nice? Do you not want to do something, go on holiday, live life? You should be, because that's the whole point. Now, other things to look at and to be considered. Profit. It's important, right? How do I do it? I accumulate. I do not short the market. I just don't need to. Don't need to. Don't want to. Don't care. Because, yeah, there's no point. Now, what I do, and as I've said it, you should start thinking bearish and start selling up here. But this is where the thing is. This is where the mustard is. This is where everyone gets really excited. I love accumulating units for free. I think it's brilliant, right? Just moving that nicely. Now, how do I do it? And the metrics on my screen are simple. I explained it in my yesterday's video. This is a total market cap. This is Bitcoin. This is the RSI. That is all I use. I use the EMA to give me a bit of a guide. I use support and resistance, but usually I just do that. I don't really need to look at the RSI. I don't really need to look at the top one, because I know roughly what trend we're in. If this is bearish, the whole market's bearish, right? So how do I do it? And I've mentioned this before. I use the EMA 21. That's all I use, right? Realistically, I don't do crossovers. I don't look at stupid Elliott wave patterns or wedges or trend lines. They're all, in my opinion, useless, right? The trend and structure is the most important thing. Looking for those lower highs, looking for those lower lows, or alternatively in a bull trend, looking for the higher low, higher highs, right? We're not forming a bull trend at the moment. We may be doing it. It's a bit more of a chance now than what it was a few days ago. But we've also formed, again, as you can see here, a lower high. Wicks are much higher. Body closure is a bit of a problem, which is why I believe this structure is somewhat happening, right? Where we're doing an impulse here. Actually, sorry, there we go. From that point up to this area, into this level of resistance, which we already know, and into this level here. Now, this is where it gets interesting, and a lot of people get a bit confused. How do you get involved? How do you find the trend? Well, this is why the EMA, in my opinion, is quite important. If you should be finding certain things, you need to look for a rejection. Now, the first rejection that was the most clear here is this one here, where we actually did form, and you can see it here, this, rejection, the 608 rejection, and we actually melted all the way back down perfectly to this 1.272 extension level, right? Perfect levels, right? And the trend is now set. Confirmation number 2 is the fact that you are below it on the total market cap, and also we were having some pretty clear and obvious divergences on the RSI. So there's 3 very, very clear warnings that this was a bit toppy. Not to mention the fact that the market was already up quite a lot of a distance, realistically, right? So the trend is now turned bearish roughly mid-November time, and there's been no reason for us to get in this market. And that is a perfect opportunity, because if you have your, let's just say, we'll call it dry powder, as people like to call it, your fluid kind of money, the money that you can utilize and want to have, you can then start introducing it much lower. And this is where that video of the dips comes in. If you've got that dry powder, you can go for a bit more of a risk because it is profit. Whatever happens, whatever lower level you buy, you're getting units. You're getting free units, and therefore you can accumulate wealth. Now, we're not talking about short, we're not talking about longing with leverage here. Yes, I do have Bybit links below. You can use Spot for this. I prefer their interface. I think it's brilliant. I know a lot of people don't like it. But for me, I think it's a much better than Binance and much better than KuCoin. But for me, I'm just looking to grow my wealth by basically selling high where people are getting too bullish and I'm starting to become bearish because it's getting a bit of a problem. And then I'm looking to rebuy back when no one wants to. Introduction of capital, where we'll see where it goes. Now, as I've said in previous videos, I will always wait for the support levels to be there, right? I do not just go willy-nilly. I don't just buy every single dip because, as I've said with influencers, they buy every single dip. Have you noticed that? It's a problem. Now, how would I turn bullish here? And the simple lines would be when we start to break levels of structure and we start to get above certain levels. Now, this isn't great structure. Now, for me, I want it to go lower. If it goes lower, we may well get a much better springboard where we will break. What we're looking to do is break out from the previous high. Then it becomes a uptrend. Basically, you're looking for the total market cap to be trending up, this to be trending up on the EMAs, and then you're looking for a closure above certain levels of support levels where it is less risky because you do not want to ape into resistance. So basically, you could be looking at 46k, could be the clear run where we may be actually looking at a clear level. And even if that does happen, right, and let's just show you, and that's why I want it to go lower, because if it goes lower, we'll have a new base to kind of work on. Basically, this base could become the next level where we could be thinking, well, you know what, actually, it's a bit better going a bit, you know, looking at certain levels, right? So even if it does break from that point, you could have a clear run up to basically this level or up to here. Now, I do feel like 62k could be a level as well. It could be a nice little move there as a swing trade where we are correcting back up into that level. Now, the reason why I show this is from this impulse here. So this is the impulse. So this could be the bullish scenario. I don't feel we're too bullish just yet. Now, if I just remove that noise, just to give you an idea, if this is the bullish market and this is a bullish retest, we could be actually looking at this level here, where we could be looking at maybe an entry at certain levels. So you could look for a riskier entry when this flips and then becomes a level and becomes a new high, but you'd look to like have a very, very tight stop loss. Or ultimately, you can wait a little bit longer till it breaks clear of that much heavier resistance level, and then look for a target up to 62, which I feel, by the way, is very unlikely at the moment. Now, the reason why I say that is because everything is going a bit ropey. But as I say, and to accumulate and to trade and to keep moving your money around, whenever this is going down, you are literally accumulating new units. When it's going up, your new units will work for you in a value appreciation model, and it will allow you to just keep rinse, repeat. Now, when you start zooming out and looking at certain time frames, even though I'm just giving you the mechanics of the psychological stuff here, you need to think this way, because if you are not looking to introduce profit when it's low and when the market's starting to turn and reverse, you should be. If you are not taking profits when it's high and people are aping in and your grandma's fucking buying into it, you should be. This is the thing. And when you zoom out, you've got all this kind of data to tell you when the market's going up and when the market's going down. So value appreciation all the way to the upside. This uptrend is very, very clear. And this clear rejection here, the RSI is giving you a huge warning here, telling you, hold on a minute, this is not looking great. And then we get that obvious lower high, and then we melt. And guess what? Entry levels back into the trend. We bounce back up, we pull back nicely into the EMAs, and this is pretty much your entry point. Once it breaks above and it's clear, you got a huge level there where you can go, well, you know what? We're above this previous level, these previous highs and rejection points. You know, you've got a much better level, and you've got a very, very tight stop loss where you can utilize it and start taking money off the table. And if you're reading this chart anyways, you're seeing the exact same setup. Literally, bearish divergence, started taking money out. And even though we're looking from a distance here, and it doesn't look like a massive move, but actually, when you're thinking about it in terms of Bitcoin, you know, if you're swing trading, a 28% move in spot market is huge. You're never going to get that in an index fund over the course of a year. You got to play what you see, which is why the narrative at the moment is very bearish. But ultimately, we could be flipping bullish very, very soon. So, there you go. That was just a simple demonstration on Bitcoin for trading altcoins. You can apply this to any chart, right? Any altcoin, any whatever, right? The same mentality is all the same way. You're buying in strength. You don't have to capture the whole move. But when it starts going too high, start taking money off the table. Start selling. Start having profits. Start having stable currencies at that top level to rebuy back low. Accumulate wealth. No one's going to get rich by buying tops. No one is ever going to change your life recommending you a coin that you've never heard of at a level of resistance. Now, again, before I go, similar sort of situation here. I feel we are going to go much lower with Ethereum. I've just got that feeling, right? And again, similar sort of situation where we've had an impulse down, okay? And what we see here is perfect, right? We're literally done this retest right into this level. We are literally still in a downtrend technically. You know, yes, we pulled up a little bit. We went above the EMA a little bit slightly. But for me to enter this, it would have been after this level here. But now, the lower it goes, the more like obstructions we're going to get to break through that structure to create that curve. Now again, let's look at the current state of play. I feel we are going to go right up to a level here, very, very close. Yeah, it's nearly on it. Right where this point is here. If I zoom out here, we're literally 382 levels. It's been resistance, it's been support, 618 level as well, similar, right? Now, there's nothing wrong with this setup, i.e. we could be going right down to $2,000. We could also be going just below that level here where we have had structure. Now, that's the trend. The trend is currently still forming these lower highs, lower lows, lower highs, lower high, low, well, low, lower high, lower low from that point. And we could be going up to here and then back into where this level is here. So play what you see, read the market, subscribe to the channel. See you later.